And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show on AM 1170. The Answer. I am your host, Michael Gaddis of FrontierLoanGroup.com. That's FrontierLoanGroup.com. And we're going to continue our discussion about the line of credit in a reverse mortgage. So don't turn off that radio. Don't think, oh, I don't need to hear that. You need to hear this, because whether you need one now or you're thinking about one in the future or you know somebody, this is literally the most powerful feature of the reverse mortgage. And I know this because I've had several financial planners who have have gotten reverse mortgages, especially for this purpose. So here's how the line of credit works. Once we determine how much you can borrow on the reverse mortgage, we subtract all your total mandatory obligations. That means, how much do you owe on the house? Okay, do you still have a mortgage? Do you have any other liens? We subtract that out. And that leaves money that we can allocate into a line of credit. Now, the line of credit grows by the same amount as your interest rate. So whatever your interest rate is in there, that's how much it grows. But it grows with that plus the mortgage insurance premium, which is 1.25%. So I'll give you an example. Let's say that you have a $100,000 line of credit. Okay? So the reverse mortgage allows you a $100,000 line of credit. You have let's say your total interest rate plus mortgage insurance, let's say it's 5%. That means at the end of the first year, you won't have $100,000 available to you anymore. You will have $105,000 available to you. The next year, it will go up again and again and again. The amount grows on the unused portion. So if you use some of it, it only grows on what you haven't used. But let me tell you about what one of my clients did. I went over and visited her, and her husband had recently passed away and her income had been slashed. So she wanted a reverse mortgage, which we got her. And we talked to her about the line of credit, and I said, yeah, and I explained it to her. And she goes, so let me get this straight. So if I have a $100,000 line of credit, and then it grows by the amount of my interest rate. She goes, yeah. She goes, so let's say you give me the highest interest rate you could possibly give me. Let's just say. And let's say that's 6%. So you give me a 6% interest rate, she says, and then she says, so next year, at the end of the first year, I'm going to have not $100,000, I'm going to have $106,000. I said, yes. She goes, so I could take that $6,000. I could pay for my property taxes, I could pay for my insurance, and I could book 2 trips, 2 cruises a year. And I said, you could do that. And she goes, and then next year, I'll have another $6,000 I can do that with. And I said, absolutely. So what she was thinking about doing is using her reverse mortgage like another income source to pay for her necessities plus her pleasures throughout the year, which is absolutely a brilliant way to do it. Some people will establish a line of credit when they're young. So they'll establish the line of credit when they're like 63, 64, maybe 65, even though they don't really need the reverse mortgage yet because, they're still working, whatever it might be. But they do it with the sole purpose of allowing that line of credit to grow over time. I have amortization tables which show people how much that line of credit grows, and it literally knocks their socks off when they see it. Especially because if you could see how much it grows, especially if you just pretend it's not there and watch it grow over time, from the time, let's say in 10 years, it'll tell you exactly how much that line of credit would be, or in 15 years. So why do they do that? Well, they do it for a couple reasons. Number one, they do it as a way to just kind of grow that money that they have available to them. But number two, what happens if you need assisted living when you're 80 years old? Okay, well, you have just and you can't depend on the real estate market because it goes up and it goes down. So what they've done is they've hedged against a housing crisis. They've established a line of credit. And now their $100,000 line of credit that they had is worth 2 to 3 times what it was worth when they got it. And that's plenty of money to pay for in-home care service and all other sorts of things. So reverse mortgages are tailored to a person's specific needs. So somebody like the first lady I told you about would get the line of credit to help her, have fun in her life, to pay for her property taxes, insurance, and then basically to take 2 cruises a year. Somebody else might use it to create a kind of a fund to tap into if they need assisted living in the future. It all depends on what your needs and goals are. But that line of credit is very powerful. It's worth just taking a look to see if you could get one just for itself. I had one of the financial planners I talked to the other day. He was like, well, maybe I should, because he barely had enough to do his reverse mortgage. And he wasn't going to have much of a line of credit left over because he owed a little bit more on his house. And he said, but you know what? I got $100,000 sitting in the bank. Maybe I should take that money, buy down my balance on my reverse mortgage, and establish a line of credit, and then let that line of credit grow like that too. And I'm like, you could do that as well. And because he goes, my rate of return in the bank is tiny, but if I put it into that line of credit in the reverse mortgage, he goes, it's going to be growing at a crazy rate. And I'm like, I know it is. So, I mean, I think the goal is to keep your your mind open when you're looking at reverse mortgages. See what the powerful features that they have are, because they can literally change a senior's quality of life. I run into way too many seniors who are living a very frugal way of life. They're existing, but they're not living. That's the problem. They're existing, but they're not living. And you know what? I didn't work my whole life, and I'm sure that they didn't work their whole lives to retire and have to live, dependent on, a super small fixed income and be house rich but cash poor. So, I'm telling you right now, if someone if someone you love is considering a reverse mortgage, you should have them call me today. Call my office and we'll sit down and talk about what the different features are to see if it's something that might work for them, because it might really blow your socks off just like everybody else's, because I'm telling you what, it's a very, very powerful tool that you can utilize in your retirement. And a lot of financial planners are starting to use reverse mortgages as a very acceptable retirement tool. It's a mechanism that you can do to live a better quality of life, because that's really what your life is about. Living a better quality of life. I run into seniors sometimes that after they pay all their bills, they're living on such tight budgets, they can't go out to see a movie, they can't go out to eat. And if the price of gas goes up too much, they don't even have enough money to go to church because the gas is too much to replenish. So, I mean, what kind of a life is that? You know what I'm saying? I mean, this is what I'm saying. You got to really reevaluate, especially in California. But the great thing about California is, versus where I'm from in Missouri, your house has gone up a lot. I talked to a lady yesterday. She bought her house in like 1975 for $30,000. $30,000 she bought this house. The house is worth like $570,000 now. So and since she's owned it in 1973, that's how much it's gone up. Now in Kansas City, it would have gone up some, but it wouldn't go up nearly that level. So what I'm saying is, a lot of the seniors that live here have a lot more ability than a lot of other people in the United States. And so if they want to live a good quality of life in Southern California, they have the ability. It's kind of like Dorothy and the Wizard of Oz. All you got to do is click your heels 3 times and you can make it happen to you. But, the key is obviously education and knowledge and understanding and really keeping an open mind. That's the number one thing you got to do. Keep an open mind and learn about things that you might not know about, or that you might have said, oh, I've heard about those. Well, you probably heard wrong. So anyway, I want to thank everybody for listening tonight. And we've talked a little bit about real estate, and we talked about reverse mortgages. But I want to thank everyone for listening. And as I said, I'm here every Monday night at 7 p.m. to talk about anything and everything related to real estate. I will be back again next Monday night, and I hopefully will have a guest. I was supposed to have a guest today, but he didn't show up. So hopefully he'll be able to make it next week, because I think you're really going to enjoy him. So anyway, thank you so much for listening to the Michael Gaddis Show on AM 1170, The Answer.